The U.S. labor market, though, adding 315,000 jobs in August. But despite that, the labor market's still a strong asset for the economy, especially as the Fed continues raising these interest rates amid record high inflation. So joining us now is Dan Riccotto, finance professor at the University of San Diego. Dan, always great to talk to you. I feel like we're always talking bad news here. Stocks were up when this jobs report was released. Then they took a sudden nosedive. What happened?
Well, Nichole, by the way, how are you? I hope everything's good. It's good news is bad news. And it's crazy, Nichole, but that's how the markets work sometimes. Overall, the job report was pretty good news, but the market took it the wrong way, bad news. And the reason why is because of the fear of ever increasing interest rates. The price of money, Nichole, keeps getting more expensive. That will hurt corporate profits. That will hurt consumers. That will hurt the overall economy. That hurts stock prices. That's the math.
All right, so you're saying that this jobs report is good. Other economic analysts are also saying that it's a bright spot in our economy. So what is the impact of this jobs report compared to the last jobs report?
Yeah, good question. So in a normal setting, this would be considered a pretty good report. 315,000 jobs, wages are up. But we're not in a normal setting right now, as you know. So right now, Wall Street is just so focused on one thing, and that's interest rates. So while the report itself wasn't bad, certainly a little bit more modest than the last report last month, it still didn't alleviate the fears of the traders that, in fact, interest rates are set for yet another pretty big increase in 2 weeks' time.
All right, so Dan, you're saying this is certainly not a normal economy. Charles Schwab is reporting that the U.S. could be in a, quote, rolling recession right now. They say that's when different sectors of our economy are hit at different times. What is Dan Riccotto's take on this?
They're probably right. So I don't see this cataclysmic recession like we had in 2008, right? The Great Recession. It's hard to see that again, but it is easy to see how pockets of the economy continue to struggle. We're already seeing it. Housing is struggling, right? The job market still strong, but starting to show a few cracks, right, Nichole? So consumer spending still strong, but starting to slow down. So we are seeing pockets getting weaker. And by the way, that's precisely what the Federal Reserve wants.
All right. Dan Riccotto, as always, thank you so much.
Happy Labor Day weekend.
Same to you. Thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.